This is Nightly Business Report with Tyler Matheson and Susie Gehring.
Whipsaw day on Wall Street. Stocks rallied out of the gate, then dropped midday, only to bounce back by the close. What's causing the volatility, and will there be more to come in the weeks and months ahead?
Focus on safety. General Motors creating a new group that will have a singular goal: safety. As Mary Barra answers questions for the first time since those heated congressional hearings.
And setting the tone, the key takeaway in Intel and Yahoo's earnings reports that could determine the market's direction tomorrow. We have all that and more tonight on Nightly Business Report for Tuesday, April 15th.
Good evening, everyone, and welcome. Do you own a neck brace? If not, you might want to consider getting one or visiting a chiropractor. Market watchers haven't seen ups and downs like today's in a couple of years. It was wild. Stocks were up early, then down hard on Ukraine worries, then bungeed up into the close on lighter than normal volume because of Passover. The Dow Industrials did finish 89 points higher, but that's not the half of the story. That was its second straight up day. NASDAQ up 11 points, but had closed in on correction territory earlier in the day, only to bounce back, closing higher now 4 of the past 6 trading days. The S&P 500, it was up 12. So what accounted for today's wild ride? Bob Pisani explains from the New York Stock Exchange.
Stocks rallied at the open, but quickly sold off in a pattern that is by now very familiar. Sell off internet and biotech stocks, and then the rest of the market follows along. Then, late in the day, the market reversed, a sign that traders are unsure where to price stocks. Now look at the IBB. This is the ETF that represents biotech stocks. After rallying at the open, it dropped 6% today in a few hours, then rallied all the way back. That's a little strange. And this whippiness is extending into the broader market. The Dow, for example, today went from flat to up 100, then dropped 200, then rallied 200 points, all in a few hours. That's very strange. What's the problem? There's more going on than just overvaluation issues with internet and biotech stocks. There's a lot of other issues that are weighing on the markets. For example, tension in Ukraine was likely a factor in the midday sell-off, but there are also China growth concerns. There's choppy U.S. economic data, and there's tax selling last week. It's hard to quantify, but high-bracket taxpayers have clearly had sticker shock this month. Finally, there's the effects of the Fed winding down its stimulus program. Is economic strength enough to offset the negative liquidity effect of the Fed's taper? There's one more issue. It's a big vacation week. We've got Passover, Easter, and spring break. It all adds up to less participants in the market. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
For more analysis on those escalating tensions in Ukraine that Bob just talked about, we turn now to Paul Christopher. He's Chief International Investment Strategist at Wells Fargo Advisors. Paul, you know, we're hearing from Russia's Putin that actions from Ukraine are, quote, anti-constitutional. The White House is warning more sanctions if against Russia if they misbehave. At what point does this crisis become an issue for the markets?
I think if we begin to see the events in Ukraine sort of cycle out of control, if the government in Kiev loses control of events in eastern Ukraine, then the markets have quite a bit more to worry about. But of course, between now and then, the tensions will sort of simmer at a low boil, and you could, from time to time, get an event like the last couple of days' worth of events that could give the market some pause as they try to discount the future.
But today, Paul, sounded like a little more than a low boil. There are reports that Russian supporting factions have taken over multiple government buildings in the eastern part of Ukraine, and Ukraine air power was being used to reclaim an airfield in that part of the country. It sounds like it is getting hot fast.
Well, it is getting hotter, but I don't think that this is going to be something that necessarily spirals out of control. Look, the Russians are probing here. They're looking for weakness. They're looking to shake loose some of the eastern provinces at as low a cost as possible. And I think they'll continue to push this way until the Ukrainians push back with enough force to neutralize the probing that the Russians are doing. So we may see some additional violence in the coming days and weeks, but I don't think we should necessarily conclude that it's the beginning of a civil war.
Mm-hmm. Well, we saw in the bond market today that Treasury prices initially rose on those Ukraine headlines, but we didn't see much action in the gold markets. In fact, gold prices fell sharply. Why is that? You'd expect just the opposite.
Yeah, that's a good point. And if we were going to see more concern about Ukraine in the markets generally, we would expect gold to be rising on that geopolitical risk. In fact, gold was off today. I think gold was tracking something else. I think gold was tracking the CPI and a modest improvement in CPI, which indicates that the Fed does not have to worry about disinflation. The Fed can go ahead with its plans to continue tapering stimulus in the months to come. That's going to mean higher yields, eventually higher interest rates, and lower gold prices.
All right, we'll leave it there. Paul Christopher, thank you so much. Paul Christopher,
my pleasure,
from Wells Fargo Advisors.
And after the bell, two big tech companies, Intel and Yahoo, reporting their earnings. Shares of both companies rose in the post-market session initially, and that could possibly set the tone for tomorrow's trading in the closely watched technology sector.
And here's more about that Intel report. The chipmaker's first quarter profit beat analyst estimates by 1 cent to earn 38 cents a share. Revenue rose by 1.5% to $12.7 billion, but that was below expectations. Still, investors bought up shares of the company. They rose as much as 3% initially in after-hours trading. And Dominic Chu joins us now to break it all down. So, we know that Intel has been challenged, Dom, over the last couple of months. And so, what did you see in the numbers?
Well, it's no secret with Intel that it's about this secular PC decline, right? We know that personal computers are not in vogue anymore. Everybody's using tablets and smartphones. Intel has been decidedly slow to the game in getting themselves up to speed. This time around, what we saw are signs that the PC demand market is actually finding perhaps some signs of stabilization, that the declines aren't nearly as fast. But where Intel is making some huge gains are in cloud computing. They broke out their segment. This data segment that they have rose by 11% in terms of revenues. And then the Internet of Things, something that we talk about all the time, about connecting your Google glasses, your watches, your smartphones, everything in your house to the information superhighway. That business at Intel has grown by about 32% from the same time last year. Now, to put it in perspective, it's about a $500 million revenue business for Intel. The chip business for PCs is about an $8 billion per quarter business. So it dwarfs the Internet of Things. But still, if you can find some segment like that, like smartphones, to kick things off, that's really where the growth's going to come from. And that's why investors, at least for now, are slightly optimistic.
And the stock was up after hours initially today, and it is up by about 24% over the past 12 months, if I'm recalling correctly.
Yeah, and that's big, too, because remember, smartphones will be big for them, too. They shipped 5 million processors this past quarter. They want to ship 40 million by the time this year is over.
Dominic, thanks for coming by and talking to us. Really appreciate it.
Always
Dominic
a pleasure,
Chu.
guys.
And now on to Yahoo, which also managed a slight beat, earning 38 cents a share and raising its second quarter guidance. Revenue grew modestly to $1.09 billion compared with $1.08 billion a year ago, and that excludes fees paid to partner websites. But the report excited investors, sending the stock initially higher. Let's bring in Josh Lipton to drill down on the numbers. The key takeaway, Josh, is...
Yeah, Tyler, I think one key takeaway, the key number that traders or investors are focused on right now, $3.1 billion. Now, that is what Alibaba just reported for its Q4 revenue. Remember, Yahoo bulls might be excited about CEO Marissa Mayer and her game plan for this company, buying talent and technology, improving products, attracting more visitors. But certainly there are a lot of traders or investors excited about Yahoo's 24% stake in Alibaba, the Chinese e-commerce giant. The reason you're seeing some relief, Tyler, is because last time we got numbers from Alibaba, there was some concern on the street about a decelerating growth rate. But now Alibaba coming out and saying, listen, Q4 revenue up 66% to $3.1 billion. Net income up 110% to $1.4 billion. Analysts at Macquarie just recently actually raised Yahoo to a buy, in part because of all this enthusiasm about an upcoming Alibaba IPO, Tyler.
Alibaba, the tail that wags the Yahoo dog. Josh Lipton in San Jose, thanks very much.
The two best performers in the Dow today were Coca-Cola and Johnson & Johnson. Both released first quarter reports, which were better than expectations, even though Coke's profit and revenue fell. but Johnson & Johnson's earnings easily topped forecasts. Here's Bertha Coombs with all the details.
Coca-Cola sales were flat in the U.S. this winter and fell in Europe. Strong growth in emerging markets helped push the company's global sales volume up 2%, edging past analyst estimates.
We are improving in key markets like China, up double digits. Brazil is up for us, another key market. Russia and India were both up 6% in the quarter, so we're improving on the prior quarter.
That growth despite a strong U.S. dollar, which resulted in higher prices in emerging markets. The exchange rate and growing pushback on sodas in places like Mexico, which enacted a national sales tax on sugary drinks, will make it hard for Coke to grow sales this year and for the stock to grow, according to analyst Caroline Levy.
I think that these sugar taxes are an issue to think about, but over the long haul, their distribution is second to none. And as long as they can sell water, juices, teas, and other things, that helps.
For Johnson & Johnson, strong drug sales offset weak results in its consumer and medical device units. Global pharmaceutical sales topped $7.5 billion, well above analyst estimates, driven by double-digit growth in high-cost drugs to treat hepatitis C, prostate cancer, and psoriasis. J&J shares up 8% this year, and other big-cap pharmaceutical names have outperformed the market, even as other healthcare names have swooned. With more than 7 million people with new health plans under the Affordable Care Act, the drug industry could see a big boost in U.S. sales, says Federated's Linda Dussel.
The people who've signed up for that are the ones who would be the sickest and who would be using the most pharmaceuticals. Arguably, the volume will go up, and probably dramatically, and that should argue for some very good pricing power.
J&J raised its full-year forecast based on strong drug sales, and that's what investors are looking for from S&P 500 firms. Expectations are for flat first-quarter growth due to winter storms, but stronger profit growth into the end of 2014. Bertha Coombs, Nightly Business Report.
And despite today's batch of strong earnings, our next guest says we are in the weakest earnings cycle in 55 years. He's Jeff Kleintop, Chief Market Strategist at LPL Financial. Jeff, welcome. Good to have you with us.
Thanks for having me.
You're not saying that this quarter's earnings are the weakest in 55 years. Explain to me what you are saying.
Yeah, take a look back. You know, you can measure earnings cycles from either the trough of one cycle to the next or the peak from one cycle to the next. I'm looking back at this cycle from 27 quarters ago when it peaked, when the prior peak was back in the middle of 2007 to now. That growth rate is very poor. Earnings are only up about 21% over that period of time. Usually every other earnings cycle over the last 55 years, we've been up 60 to 70% at this point from the prior peak. This is the slowest in 55 years, not only because the trough was deeper, but because the momentum over the last few years has been much softer than we usually see at this point in the earnings cycle.
So, Jeff, what's the takeaway from this headline statistic you're giving us for investors? What do you want them to factor this in their investment choices? And what do you think of the latest batch of earnings? They have been pretty good this week so far.
Earnings are critical. We've seen valuations rise. Now we've got to see the earnings growth accelerate to justify those valuations. And that's why you're seeing many of those high flyers in the markets with those high PEs, price to earnings ratios, have been the ones that have had the biggest tumble here lately. Fortunately, I think earnings growth appears to be turning around. What we heard today, Coke had good things to say about growth in China. Intel had good things to say about business spending coming back. We heard good things from J&J about their outlook, and CSX talked about things thawing up after that deep winter freeze. All that's good news and should suggest that earnings growth will rebound and justify these valuations, help push the market higher.
But you do seem to be suggesting that for those companies where the earnings come in a little light, a little bit shy, that you think that the prices of some of those stocks have gotten beyond where they ought to be based on those earnings.
That's absolutely right, and we'll continue to see that punishing trend in the market for some of those high flyers that aren't meeting expectations. And look, you can see that with the type of volatility we're seeing even within a certain day in the market. You can see some of those stocks really getting taken out and hammered while others rally to near new highs. That's going to be a characteristic we continue to see.
All right, so how are you playing it that you're seeing a lot of these stocks just getting hammered? And I'm not just talking about the tech area. When you see see these big sell-offs. How are you playing that? Are you buying on them? Are you sitting tight? You know, what's your strategy?
Great question. I think this is an opportunity to buy. Many individual investors have only started to come back to the stock market based on money flows. So I think these are good times to buy. You want to take a look at those business spending oriented parts of the market. They're likely to see that rebound in pent up demand. I'm talking about industrials, and I'm talking about old technology, not the consumer, new tech, maybe in the NASDAQ, but other areas of old technology. Stocks like Intel, for example, or industries like semiconductors, industries like hardware, may be the places to be as business spending rebounds. That may be one of the surest bets in what's been a volatile year.
How much does Ukraine worry you, Jeff?
You know, not a whole lot, Tyler. I think if you look at what we've seen with Egypt, what we saw with Syria, is once the prospects for a military engagement by the U.S. appear to be well off the table, the markets tend to look past the geopolitical conflict, even if it accelerates to a potential civil war within the borders of that country. So I don't think this is going to be a major issue for the market, but certainly something to watch in the backdrop were it to accelerate and begin to involve some type of U.S. action.
All right, Jeff, thank you very much for being with us tonight. We appreciate your help.
My pleasure. Thanks very much.
Jeff Kleintop is the Chief Market Strategist at LPL Financial.
And still ahead on Nightly Business Report, a General Motors CEO answers questions for the first time since the congressional hearings. Did she say enough to soothe the concerns of both drivers and investors? Tougher rules for big banks. That's what the Federal Reserve says it's considering as a way to keep credit flowing in case of another financial crisis. Speaking at a central bank conference today, Fed Chief Janet Yellen said additional capital may be required for some of the nation's largest financial institutions. Now, as you know, the Fed has been pushing banks to strengthen their balance sheets since that crisis.
The bankrupt city of Detroit has reached a deal with its retired police officers and firefighters that would preserve current pensions. But retirees would see a reduction in annual cost of living payments or adjustments. Detroit had proposed a 6% pension cut and no cost of living adjustments. The deal is subject to a retiree vote and review by the bankruptcy judge, as well as the city getting funds promised by the state of Michigan.
When you think of Detroit, of course, you think of the auto industry. And late today at the New York Auto Show, the CEO of General Motors announced a new initiative to focus on product safety. In her first appearance since her congressional testimony on the huge ignition switch recall, Mary Barra said the new group, called Global Product Integrity, will involve a new way of developing vehicles. Phil LeBeau's been covering the story all along, and he joins us now. So, Phil, as you know, Mary Barra talked with the reporters in a really quick Q&A session after that speech. What did she say? Anything stand out for you?
Nothing, really. And really, I think what stood out more than anything is that if Mary Barra thought the intensity of the public interest in both her tenure as CEO as well as how the company is handling this recall crisis, if she thought that might die down at all, take a look at this scene. After she gave a speech at this conference here, which is held for auto dealers, she was supposed to address reporters for maybe 5 minutes. It was a zoo. There were dozens of reporters, not only from here in the U.S., but from around the world, muscling into each other, pushing each other. It really was chaotic for a few minutes there. We did have a chance to ask her a few questions, and the one question that I had a chance to ask her was, how soon does she believe that the internal investigation that she has authorized by a former U.S. attorney, how soon does she believe that will be finished so that we can get some more concrete answers into what went wrong with this recall crisis? Here's what she had to say.
As I've said, we will be transparent. So that's where we're at.
How much longer for the investigation?
Again, when I said when I was in Washington, and we said 45 to 60 days, and we're still on that path.
Altogether, Mary Barra answered maybe 5 questions, Tyler and Susie, and she hasn't broken any ground in terms of making it clear to people that they are close to finishing their investigation. And the news she made today about this new Global Product Integrity Committee, clearly overshadowed by the chaos after her speech.
Is that too little too late, Phil, to really turn it around? Window dressing or more?
I don't think it's window dressing. I think it's another example where General Motors, any strides they're making right now, separate from this recall crisis, completely overshadowed because everybody wants to know exactly what happened over the last 10, 11 years.
All right, we're going to be counting on you, Phil, to get answers to all those questions. Phil LeBeau reporting from New York City.
CSX out with better than expected earnings and revenue after the bell, and that is where we begin tonight's market focus. The railroad operator said volume increased as merchandise and intermodal growth offset a drop in coal. Severe weather did impact volume in many markets, but the CEO says that CSX pushed through.
I think these are very solid results considering we had one of the worst winters on record. And, it's impacted all of transportation, railroads, trucks, airlines. We grew about 3% in carloads despite that winter weather. And since the weather is broken, we've been seeing a pace more like 10%.
The company's board also approved a 7% increase in its quarterly dividend. The stock was up initially after the report. During the regular session, though, shares were down slightly to $28.29, as you see right there. Charles Schwab, first quarter profits surged more than 50%. The discount broker's earnings topped expectations, got a lift from a rise in trading commissions and fees for managing client assets. The firm says it saw its quarterly trade volume rise to the highest level in the company's history. Shares were up more than 3% on the day to $26.11. Shares of Best Buy fell after news that the company's president of U.S. retail stores is retiring. The chain's executive, a company vet who was just promoted a few months ago, is being succeeded by the retailer's chief human resources officer. Now, the stock, which has gone from winner last year to sinner in 2014, tumbled another 3% today to $25 even.
Zebra Technologies is buying a unit of Motorola Solutions for about $3.5 billion. Both companies offer barcode scanning and other technologies that companies can use to control inventory. Zebra will fund the deal with more than $3 billion in new debt. Well, investors didn't seem to like that. Shares plunged more than 10% to $61.30. Twitter rose sharply on news it's naming Daniel Graff as its new vice president of consumer products. Graff is the former director of Google Maps. Separately, the social media company announced it was buying social data provider Ganip for an undisclosed amount. Shares popped almost 11.5% to $45.52. And Northern Trust posted earnings and revenues that were up compared to a year ago, but they missed analyst estimates. The Chicago-based bank said earnings rose more than 10% on higher fee income, but the bank's investment management services fees were hurt by low interest rates. Shares fell more than 2.5% to $59.63.
My word of the day is now going to be Ganip. Coming up, tax day is here, and while many are rushing to file on time, others are ready to fraudulently claim your refund. And the numbers are growing big time. That story coming up when we return. It was 1 year ago today that two bombs went off at the finish line of the Boston Marathon. 3 people were killed, 260 were injured. This afternoon, Vice President Joe Biden, with a delegation of survivors and first responders, observed a moment of silence at that finish line at the instant the bombs exploded. A tribute to the dead and the living. 36,000 people will run the Boston Marathon again next Monday, Patriots Day, and many thousands more will be along the route once again to cheer them on.
Here's another important date. It's Income Tax Day, and if you've left your electronic filing until today, you could be in for a rude awakening. Not your tax bill, but the fact that someone might have already claimed your refund. Identity thieves are still plaguing the tax system, and if you think you're not at risk, think again. Scott Cohn has our story.
How brazen are tax identity thieves? Just listen to the U.S. Attorney General.
Identity thieves can target anyone, something that I saw firsthand last year when 2 people attempted to get a fraudulent tax refund using my personal information.
They weren't successful in the case of Eric Holder, but the two men from Georgia, Yafet Tadesse and Eyaso Abibi, admitted stealing more than a dozen identities, including dead people, and collecting thousands of dollars. Remember that deceased person I let you look up a while ago, Abibi asked in an email? Well, it got processed, and they're sending the check. I guess deceased people work.
As many as 2 million Americans will fall victim to tax identity theft this year, according to government estimates. And while the IRS has made some strides, the fraudulent refunds it's paying out this year are still well into the billions of dollars. One private consultant says taxpayers in these 10 states and the District of Columbia are the most at risk.
Even as the feds try to get ahead of the crooks, our own reliance on technology like smartphones and tablets is playing right into the bad guys' hands.
It brings us a lot more functionality, e-banking and social networking, etc. But we're also increasing the attack surface, as we like to call it in the industry.
Experts say guard your personal information, especially your Social Security number, like it's your most precious valuable. If you still get hit, call the IRS and everyone else you do business with to keep the damage to a minimum. Scott Cohn, Nightly Business Report.
And on this day, 67 years ago, Jackie Robinson broke the color barrier in baseball, becoming the first African-American to play in the major leagues. Today and every April 15th, ballplayers across the leagues will celebrate Robinson by wearing the number 42. And the market for Jackie Robinson memorabilia is still strong. Just this past February, a bat Robinson used at Ebbets Field in 1956 sold at auction for more than $158,000. Last night, curiously, I was asking my son Mackie who his favorite baseball players were, and he said Derek Jeter and Jackie Robinson.
How did he come up with Jackie Robinson?
The movie from last year,
42.
which he's watched 42 times, I'm sure, was a real hit, and it resonated with an awful lot of young kids. It really is.
Story.
Last person to wear number 42 in the majors, Mariano Rivera. It will never be worn again.
It's been retired. That's Nightly Business Report for tonight. I'm Susie Garrow. Thanks for watching.
And I'm Tyler Mathisen. Thanks from me as well. Have a great evening. We'll see you back here tomorrow night.
I'm Susie Garrett with the Nightly Business Report News Brief. A whipsaw day on Wall Street today with wild swings in stocks on earnings news and new worries about tensions in Ukraine. By the close, the Dow rose 89 points, the Nasdaq added 11, and the S&P rose 12 points. Earnings news from Intel and Yahoo could set a positive tone for trading tomorrow. Both reported profits better than expected. Good news for the bankrupt city of Detroit. It's reached a deal with its retired police officers and firefighters, which would preserve current pensions. And it's income tax day. If you've left your electronic filing until today, you could be in for a surprise. Not your tax bill, but the fact that someone might have already claimed your refund. Identity thieves are still plaguing the tax system. Be sure to tune in to Nightly Business Report right here on your public television station.